Hey everybody, today is September 21st, 2024. Today we're going to talk about the price of Bitcoin and where I see the price of Bitcoin headed towards for the month of October. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so last time where we left off was roughly around here, right? In late August. And I basically said that the reason why we've been going sideways for 6 months is something that we saw similar to, let me just get a clean chart here. What we saw similar to last year, right? Well, we had this big impulse move from the bottom. Then we moved sideways for 6 months. Then we had an impulse move higher. The spot Bitcoin ETF, another impulse move higher, and I think this was going to be a move to digest these impulse moves, right? And so similarly, I also said that I thought we were going to move sideways for roughly 6 months, right? And that's basically what we did for like the last couple months. And basically, people who bought calls were destroyed, right? Who bought calls for this summer and early fall. And so what I didn't predict was that we were going to continue sideways. I thought that this was going to be the last month and that we would finally find a bottom and then push up higher. So where my prediction was wrong is that we're still going sideways. So this might be the 7th month that we've gone sideways for. Now, if we look at things a little bit more objectively, right, we are technically making lower highs, right? See here, and then down to here, right? And we're also still below the 200-day moving average. So right now, what I'm looking for is, I think it's very important that, well, first of all, we wanted to hold 50,000, right? So we technically have held it here. And if we look at the Fibonacci, right, we've also held this important Fibonacci level, which has held as support, right? I was a little bit worried that the third time we would break and go down lower, but we've held this so far, which is good. But for now, well, there's two things that need to happen. First, we need to break above this 200-day moving average, which is this blue line right here, which is roughly 64,000. And we also need to overtake this high here at 65,000. The reason why we don't do this is that we have to start making higher highs and higher lows, right? We are technically going sideways, but we haven't made a higher high in a while, right? So we need to take out 65,000. So what I want to see is, I want to see the price come up, maybe come down to retest the 200-day moving average. By the time it'll be around here, probably around 65,000, and then move up higher, and then retest this Fibonacci resistance level, which we got rejected over here, right? But for now, we still have to give benefit of doubt to this range, this Fibonacci range between 58,000 to 70,000, right? We're basically stuck moving sideways and below the 200-day moving average, right? But the good news is that we've had a strong recovery and we are coming close to testing it now. And of course, the weekly, you can see that we've come down and bounced on the 50-week moving average, which is also good, right? We don't want to break below, because usually when we break below, historically, it just continues down into a bear market, right? When we break below the silver line, historically, it continues down into a bear market. So the fact that we held it now is pretty good. We're still on the collapse, the brink of the previous all-time high around 69,000, right? And this is also another reason why I said that we were going sideways. Last summer we went sideways because we went up to the previous resistance level of 30,000, which over here tested 3 times and broke the 3rd time, right? And that's why I thought when we came up this time, it was going to be a lot harder to break through. So 6 months of sideways and finally broke through, right? And this time we're trying to hold the previous double top from the previous bull market in 2021 as support, right? And that's why this time we're staying a little longer than people want or expect around this level, around 50 to 70,000, because we're trying to turn this resistance into support before we push up higher to new all-time highs, which I believe will happen sometime in Q4 or Q1 of next year, right? But for now, in the short term, we need to at least retake the 200-day moving average, break above it, and then of course take out the 65,000 level, and then we can focus on the 70,000, which I think we'll do sometime in October, right? And hopefully, and the reason why I'm so bullish on October is that October historically has been a very bullish month, right, in the halving year, right? So we believe in the 4-year cycle. Last October, which that would be corresponding 4 years ago, would be October 2020, right? October 2020, if you see here, was the beginning of this huge move up, right? And September was basically sideways, right? October of 2016 was over here, and this is when we started to move a lot more parabolic, right? Until we peaked in December of the following year in 2017, right? And of course, October of 2013, for all you OGs, of course, was the beginning of this huge, massive parabolic move, right? Whereas the September, August was basically sideways, right? So historically, October of the halving years has been very bullish. And so if history repeats itself, then October should be a good year. And especially coming off the 7-month consolidation period, holding the 50-week moving average, right? And the fact that the RSI is still neutral, right? And we've come down from overbought for the monthly, and this looks very bullish, right? We're just basically on the edge of the previous all-time highs, while the RSI is below oversold, right? Same thing with the daily RSI. Nothing is telling us that we're oversold yet. So I'm very, very bullish that the fact that we've held this level instead, we three times retesting this Fibonacci support below the 200-day moving average is usually pretty bad, and I was kind of worried that we would just plunge lower. But the fact that we held this level, now we're trying to retake the previous support levels, right? It's leaving me more optimistic. So what else can we talk about? First is we can talk about what happened this month. Two major events. First is that the CPI report showed that inflation is continuing to come down, right? We peaked sometime in April this year, and we finally had what I predicted would happen, which is our first rate cut, which was basically a week ago, right, in September, which was a 50 basis point. Now, I predicted 25 basis point, but Jerome Powell apparently thought that this decrease in the inflation was enough to justify 50 basis points, which the market reacted and went up, right? So we saw this nice pump off that news, and also in the stock market, which Bitcoin usually follows. But we also want this to continue down towards the 2% inflation target, which is the Federal Reserve's target rate of 2%, right? So the next time CPI is going to be in October, and we'll see if the Fed it'll be October 10, and we'll see if the Fed believes that that would justify cutting rates even more, right? So people think that there's going to be a couple more cuts this year and definitely more next year. I think that they're going to start doing 25 basis points, because 50 basis points, that's historically pretty large. There hasn't been a lot of times where they have 50 basis points cuts. So I think next time probably 25, especially if the data comes down closer to 2%, right? So yeah, so a possible headwind, of course, is inflation. The recession, which is the shaded area. Every time the Fed starts cutting rate, it usually precedes a recession. And also the yield curve, the 10-year yield curve, is uninverting, meaning that it spent some time below this 0% mark, and now it's uninverting all the way back to 1980, right? Every time it uninverts after spending time negative, there's always followed by a recession. Now, it doesn't necessarily mean it have to be bad, but there's generally at least a shallow recession, right? And I think that what's happened is that this economy has priced in a recession. Even though we haven't had an official recession, it's felt like we've been living through a recession over like the last 4 years. So we might actually just have a shallow recession, but it's just something that I think is worth noting as a possible headwind, because I don't want to just get like 100% bullish on here and say, oh, we're just going to go up, right? But yeah, possible headwinds is a potential recession, right? Now look at hash rate. Still continue to move up high, though we've been sideways since spring, right? But currently close to 700 exahash. So yeah, as long as Bitcoin's hash rate continues to go up, of course that makes Bitcoin more valuable, more secure, right? And yeah, you can see the overall direction has been basically up since the inception, right? So that overall is good. That's healthy, right? Now let's look at some indicators, some charts to give us an idea of where we are now, heading into the potential last bullish year of the 4-year cycle, right? If the 4-year cycle is still valid, which it seems like it is. We definitely want to give benefit of the doubt until we are proven otherwise, right? So historically, when we're below this green line, according to the 2-year multiplier, it's a good time to buy. And I remember making videos last year, and where we were below this green line, saying, hey, this is not financial advice, but I'm personally buying here. Now, again, this is not financial advice, but this obviously in hindsight was a good time to buy. Now we are in the neutral zone, which is in between this sort of reddish orange and green line. And usually this follows a very similar pattern that we've seen in the past before the huge parabolic move, right? Up to this orange line, which starts to tell us that it's oversold and we should start taking profits. But so far we're still at the lower end. It's going sideways as we continue to consolidate around 70,000. So plenty of potential upside, right? Pi cycle top indicator is one of my favorite indicators to tell you when to exit your position, right? This has called the top very accurately over the last couple cycles. So that usually happens when the orange line crosses above the green line when the price is moving parabolically upwards, right? And so far, the fact that we've been going sideways for the last 7 months, basically, has helped reset this, because we're getting pretty tight up here, right? As the price went up higher, close to 70,000 pre-halving, which is the first time it's gone up to all-time highs pre-halving. And so that caused the two lines to get pretty close to crossing. But the fact that we've gone sideways is actually healthy, because that's just going to help widen the alliance, and now it's going to give us more room for another impulse move higher, which is going to take us to new all-time highs, right? Usually the price will cross the green line before it tells us to sell, and the green line right now is $108,000. So this is telling us that the price of Bitcoin could possibly go above $100,000 this time. Golden ratio multiplier, again, if you look at the context of where the price is according to comparing to the last several cycles, the orange line is just the beginning of the bull run. Usually when the price gets to the part where it's telling you to sell, it crosses above the red line into this black dotted area, right? Which starts to print once we get above the red line, right? But we're nowhere near that. So again, another indicator telling us that there's potentially more upside. Now here's the Cycle Master. Again, it's around the purple line. You can see the previous chart, when we hit the purple line, we're still in the middle of the bull cycle, right? Nowhere near the oversold zone of the red cycle, red line, which is around 160,000, right? So again, another indicator telling us that we're in the neutral zone, potentially far away from the cycle top, right? Here is a combination of different indicators of the top and the bottom, right? The delta top, top cap, CVDD, bottom, and a terminal price top, right? And this is just an amalgamation of different bottom and top signals, and it's basically telling us that we are somewhere in the middle, right? We're in the middle. We're not touching the top yet. So, and the top is easily, over 100,000, right? I mean, this one's 400. I would probably not gonna hit 400,000 this time, although that'd be nice if we did. But it seems like the lowest one is the purple line, right? And that purple line is at 141,000. So last time we touched it, and every time the other ones we surpassed it, will we hit 140,000 this time? Possibly this could go higher as the chart develops over time. So all of these indicators are very bullish, telling us that we possibly have more upside. And that's basically what I think is going to happen. So just to summarize, what I think is going to happen for the month of October is that I want to see the price of Bitcoin go above the 200-day. That's the bare minimum, right? 200-day moving average right here, which is where we're testing right now. And the second thing I want us to do is overtake 65,000, which is this local high over here. And we have to do that because we haven't made a higher high since spring of this year, since March, right? We've basically been making lower lows. Now we've been trying really hard to defend this Fibonacci area, and we finally did it this time, right? I was a little worried the third time we would plunge again, but we've managed to defend this level, and now we're above 60,000, which is good. I don't want us to see us come down again. Otherwise, it's just going to give more benefit of the doubt to the bears that we're going to push the price lower, right? So 200-day moving average, overtake 65,000, and then we can focus probably sometime in October around this Fibonacci level, around 70,000. And once we take that out, we can possibly enter price discovery and go up to new all-time highs, right? But again, just to summarize, previously in previous cycles we tend to October tends to be a very bullish month, and that's usually the start. Like I said, October. You look in the past, October over here, right? October over here, and of course October right here, right? So if the 4-year cycle is still valid, still in play, then October should be a really good month. And this is like backed by a lot of very positive developments, right? First, the fact that we've consolidated for so long without plunging, so we possibly built strong support. Then we also have the first rate cut in over 2 years, and a 50 basis point, followed by potentially more, right? Inflation is getting closer to 2%, right? The stock market is at new all-time highs. VIX is down, right? Also, the dollar has been going down, right? And this is good because Bitcoin and the dollar tends to move inversely, right? So there's a lot of positive tailwinds. But again, I want to reiterate, because we don't want to just be full on bullish, right? We want to think about possible headwinds, right? Again, usually when the Fed starts to cut rate, which they just did, 50 basis points, it precedes a recession. Also, yield curve uninverting also precedes a recession historically. That doesn't mean it has to be bad, right? A lot of people have been talking about how the last several years has felt like a recession. So maybe we'll get a shallow recession, but usually there is a recession. So just putting that out there to not go too crazy, but still. Just to summarize again, I'm very optimistic. I think October, just like the last 3 cycles over the last 10 plus years, is going to be a bullish month where we might actually see Bitcoin retake these levels, right? The 3 important levels: 200-day moving average, 65,000, and the 70,000 Fibonacci resistance level. And then from there, we should see price discovery going into November, December, and into 2025, which should be, if the 4-year cycle still stands, the final parabolic move of the 4-year cycle. So overall, I'm very bullish and optimistic going forward, albeit waiting a bit of the potential headwinds I talked about with the recession fears. But still, we want to give benefit of doubt to the fundamentals and the chart and what it's telling us. And it's telling us that there's potentially a lot of upside to come, especially over the next 12 to 14, 15 months. So that's it for the video today. Thank you for watching the video. If you found it helpful, useful, informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.